the kind of number that makes even seasoned investors pause. $4,000 per square foot. That's what one of Singapore's largest banks, DBS, now believes the average private home price could reach within the next 15 years. Not luxury penthouses, not waterfront super-condos. We're talking about the national average. 15 years ago, prices were barely half that. And yet today, DBS's projection paints a picture of a city whose real estate may be rewriting the laws of gravity. So, is this the dawn of a new era for Singapore property? Or the calm before the next great affordability storm? Let's dig in. To understand how we got here, we have to rewind. Back in 2022, DBS already made waves with a bold prediction. By 2030, the average private home in Singapore could hit around $2,900 per square foot. At that time, the market average hovered near $1,700. They weren't just throwing numbers. They studied decades of housing data, a city that saw home values climb more than 60% between 2010 and 2021, despite cooling measures, loan curbs, and even a global pandemic. Their reasoning was simple. Land is scarce. Population is rising. Income is climbing. And Singapore remains one of the most stable wealth havens on the planet. By 2030, they said, 2,900 PSF would be a natural milestone, not a moonshot. And back then, that already sounded ambitious. Until now, fast forward to today, the world is a different place. Inflation, interest rate volatility, and geopolitical tension are reshaping how money moves. And yet DBS hasn't backed down. They've raised the bar. Their new long-term outlook extends to 2040. And this time, the target is not 3,000, but 4,000 per square foot. That's a 32% increase over the 2030 benchmark, and nearly double the average just a decade ago. Now, this isn't a moonshot fantasy. DBS expects Singapore's population to climb to 6.5 to 6.7 million by 2040, with household incomes growing steadily at 2 to 3% per year. Combine that with land scarcity, stable governance, and the global inflow of wealth, and you get a long-term price growth of roughly 3 to 4% annually. In their view, that's not speculation, that's mathematics. And this view didn't just stay in the English-speaking press. It went mainstream in Chinese media. A recent national Chinese paper report made it front-page news. Singapore's average private home price may break 4,000 PSF within 15 years. The report highlighted the same fundamentals, but gave us a powerful reminder. Over the last 15 years, the average price of private homes has jumped from 1,249 PSF to 2,092 PSF, about 68% growth. And that happened during a period of repeated cooling measures, higher stamp duties, and tighter financing. In other words, this market has faced obstacle after obstacle and still kept climbing. The Chinese press also pointed to the driving forces behind DBS's projection: a stable economy, steady population growth, disciplined land supply, and the transformation of aging neighborhoods into vibrant, mixed-use districts, not to mention rising construction and labor costs. Think about that. Even if demand softens, supply remains expensive, because the cost of building, materials, and manpower is unlikely to fall back to pre-pandemic levels. So the price floor keeps inching higher, and so does the ceiling. It's not just about demand anymore. It's about replacement cost. Still, let's stay grounded. Every forecast, no matter how confident, relies on a few big assumptions. That Singapore's economy keeps growing, that immigration remains open enough to sustain demand, and that the world doesn't throw another black swan event our way. If population growth slows, if interest rates remain high for too long, or if investor appetite cools, those 4,000 PSF numbers might take longer to reach. Even DBS acknowledges this. Their models are optimistic, but conservative enough to reflect reality. The difference now isn't direction, it's speed. The property market is evolving from a sprint into a marathon. The era of flipping for fast gains may be fading, replaced by one of steady accumulation and patience. For long-term investors, that's not bad news, it's clarity. A 3 to 4% annual rise may sound modest, but compounded over 15 years, it delivers powerful results, especially when paired with rental yield leverage and time. So when DBS says prices could reach 4,000 PSF by 2040, they're not calling for a frenzy. They're calling for endurance. Singapore's property market is no longer a rocket, it's a train. A high-speed train that's slowing down slightly, but still heading in the same direction. And every new cooling measure, every policy tweak, isn't a brake, it's a stabilizer. The truth is, the market isn't overheating, it's maturing. And that's what makes it so powerful. Because in a world of volatility, Singapore's housing story stands out for one rare quality: predictability. So, will the average private home really reach 4,000 PSF by 2040? If history repeats, it's possible. If history evolves, it might even surpass it. But when that day comes, when the headlines read $4,000 PSF achieved, the real question will be, Did you act when the market was calm? Or did you wait until everyone else believed? Because one thing's for sure, Singapore's story isn't about hype. It's about time, scarcity, and the relentless compounding of value. DBS didn't change their direction. They simply extended their horizon. The next 15 years won't be about chasing the market. It'll be about understanding it. And those who do won't just be buying property. They'll be buying a piece of one of the most enduring economic stories in the world. Visit SingaporePropertyLens.com. Let's examine the hidden blind spots of your next property purchase. I am PK So, and I look forward to sharing more with you in your real estate needs.